Yes, guys, here I am with chapter number 6, nothing but CARO 2020. So, CARO 2020, it is not applicable to all the companies, right? So, first of all, we will start with applicability of CARO 2020. Then we will discuss all the 21 clauses of this CARO 2020. Got it? Yes. So, let us start our discussion. So to which companies CARO 2020 is applicable? There are certain companies which can claim exemption from applicability of CARO. Let us see them. So if you see, CARO is applicable to every company including a foreign company. So for a foreign company also CARO is applicable except the following companies. So for the following companies CARO is not applicable. What are they? Banking company. So for banking company, why CARO is not applicable? Because the reporting requirements in case of a banking company are even more stricter than CARO. So CARO is not applicable to banking company. Similarly, with respect to insurance company, Section 8 company, see, Section 8 company, the purpose is not to make the profits, but the purpose is to make charity, right? So, exemption from CARO has been given to Section 8 company. Next, one person company is a very small company where only one director is there. So, to reduce the reporting burden, CARO has been exempted. And small company means a company whose share capital is less than or equal to 4 crores and the turnover is also less than or equal to 40 crores, then you will call such a company as small company. And for small company, CARO is not applicable. Clear? Next, coming to the private companies. Private companies can claim exemption from the applicability of CARO if they satisfy all the following criteria. What is that criteria? We will see. First of all, for a private company, in order to claim exemption from CARO, it should not be either subsidiary nor a holding of another public company. If at all private company is holding another public company or private company is a subsidiary of another public company, then private company cannot claim exemption from CARO. Understanding? So apart from this, the private companies paid up share capital and reserves and surplus should be less than or equal to 1 crore rupees, and borrowings should be less than or equal to 1 crore rupees, and turnover should also be less than or equal to 10 crore rupees. If all these conditions are satisfied, then private limited company can claim exemption from the applicability of CARO. Got it? Yes. Next. Now we will start discussion of all the clauses. Before starting discussion of clauses, see, CARO 2020 is applicable for audit of standalone financial statements except clause 21. Okay, clause 21 of CARO 2020 is not applicable to the audit of standalone financial statements because clause 21 is applicable only to the audit of consolidated financial statements. Okay, so if you see in case of audit of consolidated financial statements, CARO, entire CARO is not applicable except clause 21. So only clause 21 is applicable to audit of consolidated financial statements. Except clause 21, remaining clauses are applicable to audit of standalone financial statements. Clear? Yes. Now, so clause number 1. Clause number 1, it deals with property, plant and equipment. So with respect to property, plant and equipment, what points has to be reported by the auditor? Let's see. See, auditor needs to report whether the company is maintaining proper records of PPE including intangible assets. Getting it? So whether company is maintaining proper records of all the assets or not, auditor needs to report. Next, company's management should also physically verify the inventory, physically verify the PPE at regular intervals. So whether such verification of fixed asset, that is PPE, has been carried out properly or not, that should also be reported by the auditor. If at all during such verification any discrepancies are found, then such discrepancies or the differences should be properly accounted for in the books of accounts by the company. Next, in case of immovable properties like land, building, in case of such assets, in the title deeds, name of the company should be there. If the name of the company is not there in the title deeds of the immovable property, auditor has to report here. Getting it? Yes. Next, if at all during the year the property, plant and equipment has been revalued, then auditor needs to ensure that whether such a revaluation is based on the certificate given by registered valuer. See, registered valuer is a professional whose profession is to value the assets. So if you are revaluing your assets, then it's mandatory to make such a revaluation only based on the certificate, valuation certificate given by the registered valuer. If in case, see, if in case change is 10% or more of each class of PPE, you need to specify the amount. That means original original value is some 100 crore and revalued value is some 120 crore, which is more than 10% of the original value. In such a situation, auditor needs to disclose how much amount of revaluation has been done. See, this has to be checked, not entire assets. Okay, not for the entire assets. You have to check class wise. Class wise means, see, there will be different classes of assets in the entity, like furniture and fixtures, plant and machinery, computers, right? Land and building. Like this, different classes of assets will be there. You have to check whether more than 10% change has occurred class wise. So in this class is more than 10% change occurred. In this class is more than 10% change occurred. If at all class wise for any class more than 10% change has occurred, that you need to report. Not total amount. Okay, you should not add up all the classes, and if the total is more than 10%, then you report. No, that is not the understanding. You have to check class wise. Getting it? Yes. See, they would have mentioned here each class of PPE. Got it? Yes. Next, whether, see, I'll once again explain this point. If at all during the year you have revalued the PPE, then first condition is you have to make such revaluation based on the registered valuer's certificate. Got it? Next, class wise, if revaluation, after revaluation the value of asset has increased more than 10%, then you need to disclose how much amount of increase has occurred. This increase of 10% has to be seen class wise, not the total assets combined together. Clear? Yes. See, the similar kind of point we will see even in the inventory also. For inventory also, discrepancy more than 10% class wise we will say. Okay, in clause 2 we will see it. Next thing that you need to see is whether any proceedings have been initiated or pending against the company under Binomy Property Transactions Act. So if the company is holding any property as a binomy, or if company has held any property as a binomy in others name, in both the situations binomy proceedings will be initiated against the entity. So if at all any binomy proceedings under prohibition of binomy property transaction act are initiated against the company, this point has to be reported by the auditor under this first clause. Got it? So this is clause number 1, which is reporting with respect to property, plant and equipment. Yes. Yeah. Next, moving to clause number 2, which is inventory. So, of course, physical inventory verification, it has to be done, right? So auditor needs to report whether physical verification of inventory has been conducted at reasonable intervals by whom? By management. And during such physical verification, if at all there is any discrepancy of more than 10%, the two class wise, auditor needs to report it. See, whether any discrepancy of 10% or more in aggregate of each class of inventory was noticed, whether they have been properly dealt in the books of accounts. See, what can be the classes of inventory? Tell me different classes of inventory. Raw material, right? Work in progress, finished goods. These can be different classes of inventory. So in the books of accounts, the value of raw material is 10 crore, value of work in progress is some 20 crore, value of finished goods is some 30 crore. Total will become 10, 20, 30, 60 crore, right? Now, on physical verification, you found that value of raw material, okay, on physical verification, you found that value of raw material is 8 crores only, and value of work in progress is some 23 crore, and value of finished goods is some 31 crore. Now you have to check whether discrepancy between books of accounts and physical inventory is 10% or more. Here you need to observe, you need to remember certain points. Discrepancy can be either plus or minus. So plus more than 10% or minus 10 more than 10%, both needs to be considered. So 10% on which you need to calculate? On value that is present in the books of accounts you need to calculate. So 10% of 10 crore is 1 crore, correct or not? See, here also you need to see class wise. Okay, so 10 crore, 10% means it becomes 1 crore, but actual physical inventory is 8 crores. The difference is 2 crore, which is more than 10%, correct or not? So you will report it. Next, work in progress is 20 crore, 10% of 20 crore becomes 2 crore. Actual physical verification you found it to be 23 crore. That means difference how much? 20 crore and 23 crore. 3 crore. 3 crore plus above is 2 crore minus. So both minus and plus you need to consider. Understanding. Next, finished goods. It is 30 crore. 30 crore multiplied by 10%, it becomes 3 crore. But actual difference is 30 crore, 31 crore. It is 1 crore plus or minus? Plus, correct. So this third one, this one you will not report. Only the first two you will report. So you need to check class wise. Clear? Yeah. So that you will report under clause number 2. Next, under clause number 2 only, there is subclause B. So as per subclause B, if during the year company has been granted working capital loan of 5 crore or more, so company has been sanctioned working capital limits in excess of 5 crore, not equal to 5 crore, more than 5 crore, in excess of 5 crore, then auditor needs to report whether quarterly returns or statements filed by company with such banks are in agreement with the books of accounts or not. So what is this quarterly statements? Let me tell you quickly. See, the type of loans that the banks give to businessmen are term loan and working capital loan. So term loan is a long term loan, working capital loan is a short term loan. For term loan, security offered will be the fixed assets, but for the working capital loan, the security offered will be inventory and the debtors. So this inventory and debtors value that are there in the books of accounts, they will keep on changing on a every day, correct or not? So in case of working capital, there will be two concepts. One is sanctioned limit and another one is drawing power. Okay, sanctioned limit means the total amount of working capital loan that has been sanctioned. Let's say it is 10 crore. Now 10 crore sanctioned means company cannot withdraw complete 10 crore. It can withdraw maximum up to drawing power limit. Now how to calculate this drawing power limit? Drawing power limit will be calculated based on the value of inventory and debtors. See, once in every 3 months, drawing power will be calculated based on the amount of debtors available with the entity, based on the amount of inventory available with the entity. Now, bank will calculate the drawing power. To calculate drawing power, you need to know how much inventory is there, how much debtors is there with the entity. And this debtors and inventory will be changing continuously every day on a day-to-day basis. So, company has to submit once in every 3 months stock statement and debtors statement. To whom? To bank, saying that this much stock we are having, this much debtors we are having. Based on that working capital limit, the drawing power limit will be calculated. Now, the duty of the auditor is these stock statements are submitted to the bank, na? Whether the stock shown in the stock statement, debtors shown in the debtor statement, are they matching with the books of accounts, or did the entity shown more stock, more debtors for the purpose of getting more drawing power limit? This has to be verified by the auditor and has to be reported. Getting it? See, this concept of sanction limit and drawing power we will also be seeing in bank audit chapter. There in the bank audit chapter, we will also learn how to calculate this drawing power. Getting it? We will reduce some margin and we will calculate. There we will see it, calculation of drawing power. I guess now you understood clause number 2, which is inventory. Yes. Next, moving to clause number 3, investments, loans, guarantee and security given by the company. Okay, given by company. Investments made by the company, loans given by the company, guarantee given by the company, security given by the company. Not loans taken by the company. Taken by the company will be dealt in clause number 9. Clause 3, clause 4 deals with loans given by the company. So with respect to this, what points auditor needs to report? See, whether during the year company has provided any loans, guarantee or security to any other entity. If so, indicate the following: aggregate amount during the year. So during this year, how much total amount of loan or guarantee given by the company, and how much is outstanding? There can be a possibility that during the year company has given 100 crore loan, but during the year only 50 crore has been repaid. So outstanding will be only 50 crores, balance 50 crores, right? So you should also report as on the balance sheet date how much is the outstanding amount with respect to such loans or advances and guarantees or securities to subsidiary, joint venture, associate and others. This is the first point you will report. Next, whether investments made, guarantees provided, security given or not prejudicial to the interest of the entity. So the terms and conditions of investment guarantee should not cause loss to the interest of the entity. Prejudicial means against, creating loss to the entity. Got it? So the terms and conditions of those loans, advances, investments, guarantees should not be prejudicial to the interest of the entity. Got it? Yes. Next, in respect of loans and advances, whether schedule of repayment of principal and payment of interest has been stipulated and whether the repayment on receipts are regular. See, when you take a loan from the bank, there will be schedule of repayment, on which date how much amount you have to pay, like this for entire tenure. Schedule of repayment will be there. Similarly, if the company has given loan to any third party, is there such a schedule of repayment available, and are the receipts of repayment regular? This has to be reported by the auditor. Next, state the total amount overdue for more than 90 days and whether reasonable steps taken by the company to recover the amount. If at all any loan amount given by the company is not repaid by that third party for more than 90 days, auditor need to report that amount, and whether company has taken reasonable steps to recover that amount. These things has to be reported by the auditor. Clear? Yes. Next, whether loans or advance which has fallen due during the year has been renewed or extended or fresh loan granted to settle the overdues of existing loans given to the same parties. What is this? This is called as evergreening of loans. So company has, see, in the first year company has given a loan of 2 crore rupees to Mr. A, saying that Mr. A will repay it in the second year. Now second year has come. In the second year what happened is company again given another 2 crore rupees to Mr. A, so that Mr. A will repay the old loan and the second loan is continuing. Now they told in the second year that this new loan will be repaid in the third year. Again third year has occurred. Third year also what the company has done, it has again given a fresh loan of 2 crore rupees to repay the old loan, and this 2 crore is as it is there. So this is known as evergreening of loan. First you will give one loan, to repay that loan another loan you will give, and to repay that loan another loan you will give. This will continue forever. So whether such a scenario is taking place in the company, you need to report. Okay. Yes. If yes, if at all such a scenario is taking place, you need to report the following things: aggregate amount of such dues renewed or extended or settled by fresh loans. So how much of the fresh loans which are of this type you have granted, and percentage of aggregate to the total loans. You would have given normal loans also, right? Let's say during the year you have given total loans of 100 crore. Of these 100 crore, how much percentage is of that nature? I told you, evergreening of loans. How much percentage constitutes evergreening of loans? Got it? Yes. Next, auditor should also report whether the company has granted any loans or advances repayable on demand or without specifying any terms or period of repayment. If so, specify the aggregate amount, percentage thereof to the total loans granted, aggregate amount of loans granted to promoters and related parties. So, what is meant by uh, loans repayable on demand? That means whenever company asks the third party, the borrower has to repay the amount. There is no fixed tenure for that loan. If the company asks now, he has to repay. That is known as loan repayable on demand. Whenever you demand, he has to repay. So if the company has given such loans, auditor needs to report the following: total amount of such loans given, percentage thereof of the total loans granted. So in the year total loans granted are 100 crores. Of this 100 crores, how much percentage is of demand loans? You need to report. And aggregate amount of loans granted to promoter and related party. If at all you have given any loans to promoters and the related party, you should also disclose or the report aggregate amount of such loan given to promoters and the related parties. Got it? Yes. So that is clause number 3, loans, advances, investments, guarantees given by the company. Next, clause number 4 is also with respect to loans given by the company. See, clause number 4 is simple. There is section number 185, 186 in the Companies Act. Whenever company gives any loan, it needs to comply with the requirements of 185 and 186. So auditor needs to see for whatever the loan, investment, guarantee and the security given by the company, does the provisions of 185 and 186 are complied or not. See, what is there in the 185, 186, you need not read it. Understanding that is not there in the syllabus. Yes. Next, clause 5, deposits. Deposits means deposits taken by the company. Are these deposits liability to the company? Yes, of course. Deposits has to be again repaid by the company to the deposit holders. So these are the liabilities. With respect to deposits accepted by the company, it needs to comply with the directions given by RBI. And in the Companies Act, there are provisions. Section number 73 to 76. So section 73 to 76, these provisions has to be complied, and also relevant provisions of CLB and the NCLT. If the CLB means Company Law Board or national company law tribunal, if at all they have passed any order against the company with respect to deposits, the requirements of that order should also be complied with. So these are the three requirements with respect to deposits. What are they? The company should comply with the requirements of RBI directives, section 73 to 76 of Companies Act, and the requirements of order passed by CLB or NCLT. So whether these are complied or not, auditor needs to report under clause number 5. Next, moving to clause number 6. See, clause number 6 is also simple, which speaks about cost records. So, whether maintenance of cost records has been specified by central government under section 148 subsection 1. If you see, central government has prescribed certain types of companies to mandatorily maintain cost records. If at all the company for which the auditor is auditing, the cost records are prescribed, whether it has properly maintained the cost records or not, that you need to report. See, you need to observe, clause 6 is asking only about cost records, not cost audit. Auditor need not report about the cost audit, just cost records. Are they prescribed? If prescribed, whether the company is maintaining them, that's it. Next, clause number 7. Clause number 7, it is with respect to statutory dues. So, under subclause A, statutory dues means PF, ESI, income tax, all the amounts that has to be paid to the government are known as statutory dues. Now, auditor needs to report whether all the undisputed statutory dues are regularly paid to the government or not. If at all, company is not paying the statutory dues regularly, then auditor needs to report how much amount is outstanding as on balance sheet date for more than 6 months. Understanding? So, whether company is regularly paying the statutory dues, if not, as on balance sheet date on 31st March, how much amount of statutory due is outstanding for more than 6 months, that you need to report. Clear? With respect to undisputed statutory due, if there is any dispute going on with respect to statutory due, then of course company will not pay it because of the dispute, correct or not? So with respect to disputed statutory due, you will report in subclause B. So whether statutory dues which have not been deposited on account of any dispute, then amounts involved and the forum where the dispute is pending shall be disclosed. So whether the dispute is pending with the appellate authority or the CBDT, understanding. So with whom the dispute is going on and how much amount is involved in the dispute. These things you need to report if the statutory due is not paid because of a dispute. Clear? Yes. Next, clause number 8, which is disclosure of undisclosed income. See, generally what happens is, in your income tax returns that the company files, it needs to disclose all its income that it has earned during the year, correct or not? But some companies, in order to avoid the taxes, they will not disclose some of the income. Let's say for example, for some 3 years back, for let's say for financial year 2024-25, company has not disclosed some portion of income, only some portion it has disclosed and paid the tax. Now after 3 years, let's say some 2027 and 28, income tax department will come up with a scheme known as disclosure of undisclosed income scheme. So the purpose of this disclosure of undisclosed income scheme is that, see, companies or any individual, if at all in the past have you not disclosed any of the income and not paid the tax, now you disclose it under this scheme, I will charge you less penalty. Like this, income tax department will give a offer, that is, if in that offer any of the company has disclosed the income that is not disclosed in the past, then you have disclosed it in the scheme that the income tax department has given. What about books of accounts? In the books of accounts also you should reflect this undisclosed income, correct or not? So auditor needs to report if in case during the year company has disclosed any of the income under this disclosure of undisclosed income scheme given by the government, whether the same has been properly accounted for in the books of accounts or not. This has to be reported by the auditor under clause number 8. Clear? Yes. Next, moving to clause number 9, which deals with loans, advances raised by the company. Okay, clause 9 deals with loans and advances taken by the company. So, with respect to loans and advances taken by the company, what points? Let us see. Whether company has defaulted in repayment of loans or other borrowings or interest thereon to any lender, if yes, period and amount of default. So the loans that you have taken, did the company properly repay them, or is there any default? If at all there is any default, the auditor needs to report amount involved in the default and the period for which, okay, for how much period the company is not paying that amount. These things needs to be reported by the auditor. Next, whether company is declared as willful defaulter like Vijay Mallya, Nirav Modi. If yes, auditor needs to report it here in clause number 9. Willful defaulter means wantedly company is not paying the loan. Like this, if any bank has declared the company as willful defaulter, auditor will report it in the clause number 9. Next, whether term loans were applied for the purposes for which the loan has actually been taken, or is there a diversion of funds? If at all there is a diversion of funds, you need to report it here. Next, funds which are raised on short term purposes like working capital loan, OD facility, these should be used for short term purposes only. You should not use it for long term purposes. Okay, so funds which are raised for short term purposes should be used only for short term purposes. You should not use it for long term purposes. So if at all there is any diversion of short term loans to long term purposes, you need to report it here. Next, whether company has taken any funds from any entity or person to meet the obligations of its subsidiaries, associates, or JVs. If so, details thereof with nature of transactions and the amount in each case. So, did the company take any loan for the purpose of meeting the obligations of its subsidiary, associate, joint venture? If at all company has taken any such loans, auditor needs to report amount involved in each of that loan taken by the company. Got it? Yes, simple. Company taken the loan and utilized that loan to repay the obligations of subsidiaries, associates, and joint ventures. Understand? So on behalf of its components, company taken the loan. If this is the situation, auditor needs to report. Next, whether company has raised loans during the year on pledge of securities held in subsidiaries, joint ventures. So by keeping the shares of subsidiaries, joint ventures as a security, did the company taken any loan? If yes, again you need to report. See, JVs or associates. If so, give the details thereof, and also report if company has defaulted in repayment of such loans. Clear? This is clause number 9. Next, moving to clause number 10, which is very simple: end use of funds. So if company has raised the funds through IPO or FPO, in the prospectus company would have mentioned that I will use these funds for so and so purpose. So apart from that purpose, if the company has used that fund for any other purpose, auditor will report here. So diversion of funds raised from IPO and FPO is subclause A. Similarly, company can also raise funds through private placement. Private placement means, IPO means you will give shares to the public. Private placement means you will give shares to some selected persons and raise money from that persons. So even in this private placement or the preferential allotment also, you will mention that I will use this fund for so and so purpose. So apart from that purpose, if you use that fund for any other purpose, auditor has to report it here. Another requirement here is there is section number 42 and section number 62 of the Companies Act, which deals with or which provides certain conditions with respect to preferential allotment and private placement. Whether the conditions prescribed in 42 and 62 of Companies Act has been complied or not. This will also be reported by the auditor in clause number 10. Clear? Yes, sir. Clause 11, which is about fraud. So this fraud reporting, it is there in two areas. So first of all, fraud reporting, it is there in clause 11 of CARO, right? Clause 11 of CARO and also section 143 subsection 12 of Companies Act. Now as per clause 11 of CARO, any fraud on the company or by the company will have to be reported by auditor. But as per clause, as per section 143 subsection 12, only frauds on the company, on the company by employees or officers of company, only these things will be reported. Understanding? Here again, in case of section 143 subsection 12, if amount involved in the fraud is less than 1 crore rupees, it will be intimated to the audit committee. If audit committee is not there, to the board of directors it will be intimated. But if amount involved is more than 1 crore, then it will be intimated to central government in form ADT4, you will intimate it. Understanding? So this is the fraud reporting under clause 11 of CARO and also section 143 subsection 12 of Companies Act 2013. Now we will see as per clause 11. So here you need to report whether any fraud, you need to observe this, by the company or any fraud on the company has been noticed or reported during the year, if yes, nature and amount involved. Whereas if you go and read 143 subsection 12, it says only fraud on the company by employees or officers of the company. Clear? Yes. Next, there is a linking between 143 subsection 12 and CARO also. So as per section 143 subsection 12, if amount involved in fraud is more than 1 crore, you will file form ADT4, you will intimate to central government. So what CARO says is that if at all you have intimated to central government any frauds under 143 subsection 12, you mention it here also. See, whether any report under section 143 subsection 12 has been filed by the auditors in form ADT4 with central government. If yes, you show it here. You say that yes, we have filed form ADT4 with central government for so and so purpose. Got it? Next, auditor should also report whether he has considered whistleblower complaints, if any, received during the year by the company. What is meant by whistleblower complaint? See, whistleblower is a mechanism that is established in the organization for purpose of communicating any frauds in the organization. Let's say for example, Mr. A is employee of the organization. He is committing some fraud. Now the chance that Mr. A is committing fraud, it will be most probably known to his colleagues, right? His colleagues like Mr. B, Mr. C. These people will be the first people who will come to know that Mr. A is doing fraud, correct or not. Now, company should have a mechanism known as whistleblower mechanism, wherein by using this mechanism these colleagues can communicate to whom? To top management that Mr. A is committing so and so fraud. Okay, this mechanism is known as whistleblower mechanism. Got it? Yes. See, So the complaints received under this whistleblower mechanism should also be considered by the auditor. That is clause number 11. Next, moving to clause number 12. Nidhi companies. What is meant by Nidhi companies? See, the main objective of Nidhi companies, they will collect funds from the members and give loans to the members. So with respect to Nidhi companies, you have to check three things. First one, whether Nidhi company is maintaining net own funds to deposit ratio of 1 is to 20. That means for every 1 rupee of own fund of the Nidhi company, maximum deposit it can accept is only 20 rupees. More than 20 rupees it cannot accept. Understanding? That means for every 1 rupee of own fund that the Nidhi company is having, maximum 20 rupees of deposits it can accept. That means if it is having some 2 crore worth of own fund, maximum amount of deposits it can accept is 2 crore multiplied by 20. How much it becomes? 40 crore, right? So maximum is a 40 crore deposit it can accept. This is maintaining net own fund to deposit ratio of 1 is to 20. So whether this is 1 is to 20 or more than 1 is to 20, auditor needs to report this. Next, whether Nidhi is maintaining 10% unencumbered term deposits as specified in Nidhi rules. Unencumbered term deposits means, let's say Nidhi has accepted total term deposits of 100 crore rupees. Okay, now these term deposits which the Nidhi has accepted, it will give as a loan, correct or not? It should not give entire 100 crores as loan. It can give only 90 crores as loan. Okay, the remaining 10%, okay, 10% of deposits accepted, how much it becomes? 10 crore. So minimum 10 crore should be kept as freely available whenever it wanted to use. That is known as unencumbered. So at least 10% of term deposits should be kept as unencumbered. Understanding? Should be kept freely available whenever it wanted it can use. Unencumbered means it is available for free, you can use it whenever you wanted. That is known as unencumbered. Got it? So whether unencumbered deposits of 10% is maintained or not, you have to report. Next, whether there has been any default in payment of interest or deposits or repayment. So Nidhi will accept deposits. On that deposits, it has to pay interest. So whether there is any default in repayment of interest or whether there is any default in repayment of actual principal, if yes, auditor will report it here. That is clause number 12. Got it? Yes. Next, clause number 13. Clause number 13 is also simple. So if the company enters into any related party transactions, it needs to comply with section 177 and 188 of Companies Act. See, section 177 and 188 contains certain requirements, certain resolutions that has to be passed. So the actual content of section 177, 188, you need not know. You just remember that if the company enters into related party transaction, auditor need to report whether section 177 and 188 has been complied or not. That is clause number 13, related party transactions. Next, clause number 14, which deals with internal audit. So auditor needs to report whether company has an internal audit system incommensurate with the size and nature of its business. So let's say the size of the entity is some 1,000 crore worth of business, and in the internal audit department there is only one person. Is the size of internal audit department commensurate with the total size of the company? No, at least some number of members should be there for that much size of the entity, correct or not? So auditor needs to report this, whether the internal audit department size is incommensurate with the size of the entity. Next, now, by the time statutory auditor comes to audit the entity, already internal audit would have been done. 4 internal audit reports will be available. The statutory auditor should consider those internal audit reports. So, statutory auditor under clause 14, he need to report whether he has considered the internal audit reports or not. See, whether the reports of internal auditor for the period under audit were considered by the statutory auditor. Got it? Yes, that is clause number 14. Next, moving to clause number 15, which is non-cash transactions. What is meant by non-cash transaction? Any transaction in which no cash is involved. That means barter, you can say, simple exchange of goods, right? So there is a land, company is having 1 acre of land, director is having 1 acre of land. So director is giving his 1 acre, company is giving its 1 acre. No cash has exchanged, just the lands have exchanged. This is a non-cash transaction. Now for these non-cash transactions to take place, there is section 192. The requirement of section 192 of the Companies Act has to be complied. So in case any non-cash transaction has taken place, whether the requirement of Companies Act has been complied or not, auditor needs to report. Got it? Generally for non-cash transactions, approval of shareholders is required. That will be said in section number 192. Clear? Yes. Next, clause number 16. So clause number 16 is with respect to NBFCs. So with respect to NBFCs, the points that you need to report. Generally, in order to do the business of NBFC, you have to obtain certificate of registration from RBI. Without obtaining certificate of registration, you cannot do the business of NBFC. So you need to report whether company has obtained registration under section 45IA of RBI Act, or is the company doing any, see, whether the company has conducted any non-banking financial or housing finance activities without a valid certificate of registration. If yes, you will report it here. Got it? Yes. Next, you should also report whether company is a core investment company. Core investment company means there is a definition for it. Minimum 90% of its total assets should be in the form of investments in its group companies, and minimum 60% of such investments should be in the form of investments and equity share capital of its group companies. Understanding? Then you will call it as a core investment company. Core investment company means its main purpose is to do the investments in the group companies. Got it? So whether company is a core investment company, if yes, okay, as defined by RBI, if so, whether it continues to fulfill the criteria of CIC. I told you, in order to continue as a CIC, you need to satisfy certain conditions, 90%, 60%, whether the conditions are being satisfied. And in case company is an exempted unregistered CIC, whether it continues to fulfill such criteria. So you need to report whether such criteria of 90%, 60% are being followed or not, okay, fulfilled or not. Next, now, if the group is having more than one CIC, you need to report how many CICs are there in the group. Let's say Reliance Industries. In the Reliance Industries, there will be core investment company, okay, which will invest only in the group companies of the Reliance Industries. Now, if this group, Reliance Industries group, is having more than one core investment companies, then auditor needs to report how many core investment companies are there in your group. Got it? So where the group has more than one core investment company as part of the group, if yes, indicate the number of core investment companies which are part of the group. That is clause number 16. Next, moving to clause number 17, which is about cash losses. Cash loss means, see, for the profit or the loss, as per the profit and loss statement, if you make the adjustment related to non-cash items, like depreciation is a non-cash item, correct or not? And some incomes which are accrued but not yet received are also non-cash items. So for the profit that you have arrived, if you make these non-cash item adjustments, if you are arriving at a cash loss, then you need to report it. Let's say, for example, in the profit and loss statement, company has shown profit of 20 crore. So, and in the income side, there is a particular income which is recognized on accrual basis, but still that income is not received. Let's say the value, the amount of such income is some 25 crore, which is a non-cash item. Now in this profit, this 25 crore also included. So if you reduce this non-cash item from the profit, you will go into 5 crore loss. So if company is making any such cash losses, cash loss, how to calculate cash loss? By adjusting the non-cash items. Understanding? In such a situation, see, cash loss for the current year, cash loss for the previous year, both you have to report under clause number 17. Got it? That is cash losses. Next, clause number 18, which is about resignation of auditors. So whether there has been any resignation of the statutory auditors during the year, if so, whether the auditor has taken into considerations issues, objections, concerns raised by the outgoing auditor. Now during the year you have been newly appointed as auditor because the existing auditor has resigned. Now since the existing auditor has resigned, the newly appointed auditor should consider the reasons, objections raised by the resigning auditor. So have you considered those objections and issues raised by the resigning auditor? If yes, you will report it here. Okay, have you considered his objections or not has to be reported in clause number 18. Next, moving to clause number 19, which is very simple. So auditor, you have done this much audit now, you have verified these many clauses now. Based on your audit, do you believe that company will be able to continue as a going concern or not? You have to report it in clause number 19. Okay. Next, clause number 20, which is unspent CSR. CSR means corporate social responsibility, right? So in case of certain listed companies and in case of certain specified companies, 2% 2% of profit has to be spent on corporate social responsibility purposes, CSR. That means giving back to the society. Now the time limit is within end of the financial year, within 6 months you have to spend this amount. If at all you fail to spend, then from the end of financial year, within the 6 months you have to deposit unspent CSR in a specific fund by name IEPF. IEPF is a investor education and protection fund that is maintained by central government. So the requirement is every company means certain specified companies, listed companies, and certain criteria of companies are there. For those companies, every year of the profits that they make, 2% has to be spent on corporate social responsibility like planting trees and some society welfare activities. If company fails to spend the amount, that becomes unspent CSR. Now this unspent CSR has to be deposited in investor education and protection fund of government within 6 months from the end of the financial year. Whether such a deposit has been made properly or not will be reported by auditor here in this particular clause. Next, in some situations what happens is, let's say the entity wanted to construct a school as part of its CSR activity. Now construction of school, it will not take place within 6 months or 1 year. It will take some 2 years or 3 years for construction, correct or not? So you will call it as ongoing CSR project because it will take more time to get complete. Now you are spending the amount on ongoing CSR project. In such a situation, you need not deposit this fund in IEPF account, but you keep this fund in a separate bank account of your own and utilize this fund for that ongoing CSR project. So whether any amount remaining unspent under section 135 subsection 5 pursuant to any ongoing project means the project completion will take some long time. In such a situation, has been transferred to special account in compliance with section 135 subsection 6. Got it? Yes. Next, final clause, clause number 21. I told you Clause number 21 is applicable only to the audit of consolidated financial statements. Why it is applicable only to the only to the consolidated financial statements? Let me tell you. So, in the consolidated financial statements, you will include the financial statements of subsidiary, financial statements of associate, financial statements of joint venture, correct? Now, there will be separate CARO report for subsidiary, right? There will be separate CARO report for subsidiary. There will also be separate CARO report for associate. The individual auditors, they will have audited and given CARO report. For joint venture also, there would have been some separate CARO report, right? In each of these CARO, the reporting on 20 clauses will be done. All the 20 clauses which we have discussed, the 21st clause will not be done because these are not consolidated financial statements, right? So reporting on all the 20 clauses will be done, right? Now, the financials of all these will be included in the consolidated financial statements, and auditor of consolidated financial statements, he has to give CARO specifying only clause 21. Okay, CARO of consolidated financial statements consists of only clause 21. Okay, clause 21, only clause 21 will be there. Now, what has to be reported in clause 21? Let me tell you. Now, in the subsidiaries CARO, if any clause has been reported negatively, if there are any remarks with respect to any clause, let's say with respect to subsidiary CARO, clause 7 has been reported negatively. There are remarks in clause 7. Now, the clause 7 you will copy as it is from subsidiaries CARO and you will paste it here in the CARO of consolidated financial statement. Similarly, if in the associates CARO, let's say for example, clause 9 has been reported negatively. Reported negatively means certain qualificatory remarks, certain points have been mentioned there, so that you will copy paste into CARO of consolidated financial statements in clause 21, that is clause 21. Understanding? So all the negative remarks of CAROs of components will be copy pasted into CARO of CARO of consolidated financial statements, which is nothing but clause 21. Now we will read clause 21. You will be able to easily understand it. See, whether there have been any qualifications or adverse remarks by the respective auditors in CARO reports of the companies included in the CFS. Which companies will be included in the CFS? The subsidiaries, associates, joint ventures will be included in the CFS. If auditors of those companies have given any qualificatory or adverse remarks, if yes, then indicate the details of companies and the paragraph numbers of CARO report containing the qualifications or adverse remarks. Got it? This is clause number 21. By this, the complete discussion of CARO is completed. Now, so if you like the class, you know what to do. What will you do? You will comment the best lecture. Got it? Yes. So now let me open chapter number 7.